Welcome to Cortburg Speaks Retirement, an audio podcast about investing in the stock market, financial planning, money management, and retirement planning. Each Wednesday, we help investors at all stages of life learn how to potentially grow and preserve their money from first job through retirement. Now here's your host, Miguel Gonzalez.
Good morning and welcome to the Cortburg Speaks Retirement audio podcast. On this week's audio podcast, I share things to consider going into the new year. At the end of the year, it is necessary to reflect on your financial picture, review the last 12 months, and plan for the future. With all that is involved, it can seem overwhelming. Consider breaking up the responsibilities over 12 days, focusing on one each day and ensuring it gets a comprehensive review. On day one, review my financial plan in preparation for a meeting with a financial professional. Conducting a review of your financial plan at least annually allows you and your financial professional to evaluate your financial condition, make necessary modifications to any accounts, create strategies to approach the new year, and set goals. Day number 2, conduct my year-end tax review. To stay on top of your taxes, you may want to consider a year-end tax review to clean up your books and evaluate your tax liability for the new year, if you should have one. Determine what is taxable income. Assess all filing deadlines. Did any rule changes affect your filing? Day number 3, review my retirement accounts. Life is regularly changing, occasionally requiring modification of your retirement accounts. An annual review of these accounts can help assess your current situation and to plan for the future. Day 4, review my investment portfolio and rebalance if necessary. Reviewing your portfolio may help you evaluate your progress based on your investments and your asset allocation. Rebalance if necessary. Rebalancing has the potential to help you adhere to your investment plan regardless of how the markets fluctuate. Day 5, review my spending and modified my budget. Conducting a comprehensive review of your spending allows you to see where the money is going and may offer insight into what you may want to cut out that is unnecessary. Day number 6, review my debt repayment plan, evaluate my progress. Make a list of your remaining debts from largest to smallest amounts. Prioritize debt you want to pay off the fastest first and determine the best payment schedule. Day 7, contribute to my 401k. The deadline is December 31st. 401k plans, the limit on employee tax deductible elective referrals is $20,500 for 2022 tax year. Anyone age 50 or older during the calendar year can make an additional catch-up contribution of up to $6,500 for 2022. Non-401k plans for 2022, the standard contribution limit for traditional and Roth IRA remains at $6,000. For those 50 years of age or older, you can make an additional catch-up contribution of up to $1,000 annually for a total of $7,000. Day number 8, review my beneficiaries. Review the beneficiaries for your will, your trust, insurance policies, retirement accounts, or any other accounts and modify them as you see fit. Consider taking this time to designate contingent beneficiaries. Day number 9, claim a 529 plan deduction. Rules and tax benefits vary by state. If you use the funds for non-qualifying expenses, you will have to pay income tax and a 529 withdrawal penalty of 10% on earnings portion. 7 tax parity states offer a state income tax benefit for contributions to 529 plans from any state. These include Arizona, Arkansas, Kansas, Minnesota, Missouri, Montana, and Pennsylvania. Day number 10, you're almost there. Day number 10, withdraw my required minimum contributions or my required minimum distributions, I should say, if applicable. These are called RMDs. If you fail to withdraw an RMD by the application deadline, fail to withdraw the full amount of the RMD, or fail to withdraw an RMD altogether, the amount not withdrawn is taxed at 50%. 50%. Distribution in excess of the RMD for 1 year cannot be applied to the RMD for a future year. Roth IRAs do not require distribution withdrawals until the account owner has passed away. Day number 11, review tax deductions for donating to charity. Unlike in the tax year 2021, which allowed married couples filing jointly to deduct up to $600 without itemizing, as of April 2022, you can no longer make charitable tax deductions without itemizing them. Generally, you may have to deduct up to 50% of your adjusted gross income, AGI. However, 20 or 30% limitations may apply in some cases. Individuals may deduct qualified contributions up to 100% of their AGI. A corporation may deduct eligible contributions up to 25% of its taxable income. And day number 12, the last day to prepare, schedule a consultation with a financial professional to discuss where your family and you stand financially and how you can make improvements. Also, it's not a day 13, but also make sure to visit our website, www.cortburgretirement.com. Our site is filled with educational videos, ebooks, publications, and financial calculators designed to help you learn more about your finances. As you search our site, send us a note regarding any questions you may have about any particular investment concepts or products, and we will get back to you quickly with a thoughtful answer. This is Miguel Gonzalez, certified retirement counselor and managing partner with Cortburg Retirement Advisors, signing off for this week's educational podcast.
The opinions expressed and material provided are for general information and should not be considered a solicitation for the purchase or sale of any security. Opinions expressed are subject to change without notice and are not intended as investment advice or a solicitation for the purchase or sale of any security. Please consult your financial professional before making any investment decision. Securities offered through LPL Financial. Member FINRA SIPC. Investment advice offered through Private Advisor Group LLC, a registered investment advisor. Private Advisor Group LLC and Cortburg Retirement Advisors Inc. are separate entities from LPL Financial. Investing involves risk, including possible loss of principal.